Gold just passed $2,000 an ounce, setting the stage for a historic new bull run. Multiple billionaire investors are loading up on gold, including hedge fund founder Ray Dalio and real estate mogul Sam Zell, meaning now is the time to own gold. One precious metals expert is stepping forward with a big prediction. He believes we could see gold reach as high as $3,000 by the end of the year, possibly higher. So find out why and get instant access to his #1 gold investment for 2022. It's not bullion, an ETF, or a mining stock. In the past, folks using the same gold strategy could have been able to make nearly 50 times their initial investment. Considering how quickly the price of gold has been moving, you don't want to waste any time missing out on the gains he believes are in store for this investment. So to get a copy of his new free report with all the details, simply go to 2022goldmania.com. Again, that's 2022goldmania.com for a free copy of his new report. Hi, this is Daniela Cambone and welcome back to Stansberry Research. Today we are talking about a major move here. Saudi Arabia in active talks with Beijing to price some of its oil sales to China in the yuan, a move that would dent the US dollar's dominance of the global petroleum market. Here to get his take on this and more is Doug Casey, author of numerous New York Times best-selling books. He is the man behind Doug Casey's Take, a very popular podcast, and the founder of internationalman.com. Doug, thank you so much for being with us. As I was telling you offline, I feel pretty helpless given the world crisis we find ourselves in. And all I could do in my small little world is bring on experts like yourself to help make sense of what's going on.
Well, all I can tell you is that the experts know nothing, including myself. And a major reason for that is that basically all we know is what we hear from government-approved sources and the mass media, which are basically minions of the government, and even the things that I hear and read. And I subscribe to several international newspapers in Hong Kong and London, and of course here in the US and others. You've got to take it all with a grain of salt, because in war, it's been said correctly that truth is the first casualty. So don't believe anything.
So on that note, let's start with the latest developments here. I mentioned Saudi Arabia, and my main question to you is the US dollar in danger here?
Yes, well, it's been an increasing danger for decades, but now it's gotten to a critical level. Look, from the most basic point of view, the US government itself is bankrupt, terminally bankrupt. It can't dig itself out of the hole. In fact, it's digging the hole deeper. The official $31 trillion deficit is being added to at the rate of $1 trillion and a half a year. So everybody knows, certainly sophisticated people know, that the dollar is a hot potato. And the main thing that's holding the dollar up is the fact that its major commodities, oil, which is the world's largest traded commodity, are priced in dollars. But if the Saudis and other countries start accepting the yuan instead of the dollar, then what do people need dollars for? This 20 trillion, nobody knows for sure, but that's a good estimate, US dollars outside the US.
Right.
And if people don't need them to buy commodities, well, they don't need them for anything. And they're going to start unloading them. So yeah, this is a really dangerous situation. And it's not just the Saudis, it's the Nigerians, who are major African oil exporters, are doing the same thing with the Chinese. The Nigerians, the Saudis, don't buy anything from the US, but they buy lots of stuff from the Chinese. So it's perfectly logical.
And to that point, I just want to bring up a quote that was in the Wall Street Journal. They were the first to break this report, that the oil market, and by extension, the entire global commodities market, is the insurance policy of the status of the dollar as reserve currency. If that block is taken out of the wall will begin to collapse. So exactly what you were saying, Doug. So if the US dollar's role and dominance as reserve currency is coming to an end, I mean, what replaces it?
Well, that is the $64 question. I think what's going to happen is that we're going to go back to gold. Look, even the Chinese and the Russians who are closer now than ever, do most of their trading, I understand, with US dollars, which is crazy. They have to clear those dollars through New York, the homeland of their enemy. You don't use the enemy's currency, for God's sake, or the adversary's currency, if you wish. It's best that they use a neutral currency, one that can't be inflated out of existence, one that can't be closed down at the discretion of some half-crazy pals in Washington, D.C. I mean, Russia's had all of its dollar accounts confiscated or put on ice, as it were. So any country realizes it could happen to them. So the US is shooting itself in the foot by trying to punish the Russians.
And hold that thought, I want to get back to, but first let me dig a little deeper. But what you mean return to gold, like a gold standard, or how would that work? What would it look like?
Well, ideally, it would look like something we had in the 19th century. You might recall that in the 19th century, which was an excellent period of time in world history, there were fewer wars, there was more progress, currencies were sound, governments were tiny. The franc, the mark, the lira, the dollar, these were just names for specific amounts of gold. And I think it'll go back to that. Listen, you really don't want government involved in currencies. I mean, gold takes governments out of currencies. You don't have to trust a government if you use gold. So yes, as strange as it sounds, I think the world is going to go back to gold because it's the only, I've said this so many times, but it's worth repeating. It's the only financial asset that's not simultaneously somebody else's liability. And all the world's governments, especially that of the US, are bankrupt. So who wants their liability?
Would there be enough gold to support such a system?
Yes, it just depends on the price of gold. How much gold is there in the world? Well, it's uncertain, but say about 6 billion ounces. And if we do some multiplication, divide the amount of ounces that the US Treasury owns, for instance, which is supposed to be 265 million. If we divide that into the number of dollars outside the US, we come up with a very high price. Divide 265 million into 20 trillion, divided into the amount of the US debt, if the debt was going to be paid back with the US gold reserves, a huge high number again. That's on the one hand, Danielle, but on the other hand, and I've been long gold since 1971 when I bought my first gold coin.
Yeah.
And it's done, you know, they always said, a quarter ounce of gold will buy you an excellent meal in the best restaurant in New York. A quarter ounce of gold will buy you an excellent suit. Not that anybody wears suits anymore. Gold is reasonably priced right now. Let me put it that way, relative to other commodities, relative to stuff in general. It's not cheap. It used to be cheap. It's not cheap anymore. But I think you can go a lot higher because there's going to be a panic into gold. Remember, only financial asset that's not somebody else's liability. There's not going to be a panic into lead or a panic into cadmium or copper. Well, there might be for other reasons, but not for money. Yeah, I think it's going higher.
It's interesting you say that because I've had so many folks emailing me saying, you know, I'm really thinking about getting into gold given everything that's happening, but I'm just waiting for a pullback. And well,
Now look, you should be buying gold for savings and for insurance and for prudence. At these prices, I don't consider it a great speculation. It was a great speculation back in the year 2000 when it was selling for $250 an ounce, when incidentally, it was cheaper then than it was in 1971 in constant dollars. But now it's just kind of reasonably priced. So continue buying gold, but buy it for savings. And you don't really want savings in a bank because you know the dollars are being inflated out of existence. You might wind up bailing in the bank yourself, like happened in Cyprus. So yeah, your serious savings should actually be in gold coins.
you're losing money by having your money in the bank, given the rate of inflation right now.
Well,
So,
look, the actual rate of inflation is about 15%. Forget about the government's phony figure of 7.8% or whatever they say. The US government's figures are only marginally more reliable than those of the Argentine government. So don't trust them. A real inflation, the dollar's losing value at around 15% per year. I think it's going to 20% and higher. But interest rates, banks will give you what? 0, 1, 2%. So no, there's something seriously wrong. I mean, this is why the world's financial system is teetering on a knife's edge.
Doug, why, would you not think that the next currency, instead of gold, wouldn't it be some sort of digital currency?
There's no conflict between the two things. Gold can be represented in a digital way. In other words, gold held in deposit, and you trade hundredths of a gram of gold on your smartphone. So it can be very good. The important thing is that the currency that you use is backed by something. It's something real. And of course, this comes to the question of, well, what about Bitcoin? Is Bitcoin real? And as a money, Bitcoin suits most of the characteristics, or actually all of them are good. It's durable, it's divisible, it's convenient, it's consistent. And I always ask myself, well, what's the value proposition in Bitcoin? When I get holding the bag just with a digit on my smartphone, if I own Bitcoin, and then it occurred to me that 75% of the people in the world, if they save anything, they're going to be saving it with worthless currencies like dirhams and kwaches and pesos. So the value proposition with Bitcoin is that you don't have to, you have a transfer mechanism where if you're in Zambia, you can get your money out of Zambia anywhere you want instantaneously. But if you have Zambian kwaches, you're stuck, basically. So that's the value of Bitcoin. It's a transfer mechanism.
If we were to return to some gold-backed system, Doug, what would where would that put the price of gold? I know that's a pretty hard forecast for you to make, but approximately, where would we be?
Well, like I said, I've computed this in the past. It's a question of whether the dollar still remains the numeraire. I don't know. You just can't tell, because if we have a reset of that type, there's probably, on the one hand, going to be defaults of a lot of debt, bonds and so forth, government paper. So that would mean dollars are wiped out. But at the same time, governments are going to try to prevent that from happening, and they're going to be printing up more and more, as they're doing now. So I hesitate to guess. What I'll say is this: own gold in your own physical possession for savings. And if you want to speculate, own gold stocks, because industry-wide, the all-in sustaining cost, this is the highest cost parameter you can use, of gold stocks now is about $1,000 per ounce. Some are much less, some are much more, but 1,000 is about what the world average is. But gold is selling for close to 2,000. So the margins in the industry are tremendous. Gold companies that are actually mining gold are coining money right now, but the market doesn't seem to care. In fact, the market doesn't even seem to know. They all think that gold is a pet rock.
Maybe that's what it is. Maybe that's exactly what it is. Market doesn't know, not the pet rock that the market doesn't know.
Right. No, I'm very long gold stocks, because in the market, which is generally quite overpriced, because all the money printing that various governments have been doing now for decades has flowed into financial assets. And people that manage these financial assets don't believe in gold for all kinds of reasons. So it's not even on their radar screen, gold stocks. So that's where I want to be. I think there's going to be a panic into gold stocks at some point. There's going to be a mania into gold stocks.
I want to get back to your point about the US shooting themselves in the foot. Uh, Trying to get into the mind frame of the administration here, Doug. Um, they obviously knew that imposing these sanctions on Russia would come with huge repercussions. Help me get through that thought process for them. They must have been anticipating, like, hold on a second, this could really put the US dollar at danger here.
Hmm. I really wonder if they thought it out that well, quite frankly. These people psychologically, they have the thought processes of the Jacobins in France at the end of during the French Revolution. They have the psychological profile of Bolsheviks in Russia. I mean, if you look at the people that Biden has appointed, and just generally the people that live within the Washington Beltway, uh, they have no understanding of economics whatsoever. So have they really thought this
Wow.
out? I'm not sure they have.
Well, that's frightening, Doug. That's absolutely frightening.
I mean, we don't have the best and the brightest in charge of world governments. We actually have the worst kind of people. There's two kinds of people in the world: people that like to produce things and manipulate atoms, and people that like to manipulate other people. And these, they're glib and they smile nicely. They go into politics, but they're dangerous. And on some level, they're really criminal personalities, quite frankly. So these are the people that are in charge of the West. I mean, it's not good.
Doug, let me ask you this, bringing it back to money here. Does the war in Ukraine, there's a lot of talk of it fast tracking the Great Reset. Do you agree with that?
Well, yeah, the Great Reset. This is a term that was coined by the people that go to the World Economic Forum in Davos every year, and these are the rich and the powerful. Uh, and I think these people really think that they ought to control the little people out there. I mean, they treat they treat the world like a cattle farm, where most of us are feedlot cattle. A few of us are free range cattle, and they're kind of like the cowboys that are trying to keep us in order.
To that point, you've been on the show multiple times, and in the past, you were speaking about the coming Fed dollar, which maybe at the time seemed like it'd be, a decade, maybe 5 years away. But all of a sudden, we get new executive mandates uh, on cryptocurrency, and we see that perhaps in it, is talk of a coming digital dollar and how the government is now seriously considering it, and maybe they're already working on it. Um, the
Oh,
timing of all this is interesting.
well, it is. It would seem like the powers of darkness are making their move. It's like the Black Riders from Mordor have ventured out and decided to make their move. The digital dollar, it's going to be one of the biggest disasters that's ever been visited upon people. I mean, look, what did Klaus Schwab say? You'll own nothing and be happy. Well, you might recall that Biden's candidate for comptroller of the currency was a woman named Sala Amarova, a Russian. And one of the things that she was putting forward was that every American would have an account directly with the Federal Reserve, and you would have digital dollars on your iPhone. It would obviate a great deal of the current banking system, which incidentally I'm not a fan of, but that's a different story. Now, at that point, you're going to be very much like Will Smith in that movie, Enemy of the State, where everything that you have, which is digital today, everything from your credit cards to your bank accounts to the statements on your stock account, everything, you can be shut down by the government. Or if the government chooses to, they can airdrop $1,000 or $10,000 into everybody's account. No, this is like the polar opposite of using a gold standard, where you can control your wealth. And it's this would be the total politicization of wealth, which is to say, the control of wealth by people that get control of the government. And at this point, people with very bad philosophies control the apparatus of the state. And once they do that, you're in big trouble. Look, once Hitler took over in 1933 and controlled the apparatus of the state, it was game over. When Lenin took over Russia in 1917, it was game over for the next 70 years. And I just hope that we're not that far advanced here in the US, but when Mao took over China, he changed the nature of the country for a long time. We may be at that point in the US. I don't know, could be, it's possible. The trend has been very negative for a long time.
Doug, as always, excellent thoughts from you. Just to bring it home here, it's obviously very uncertain and terrifying, frightening times. So for the folks watching at home, I know you mentioned you like gold right now. You've liked it for a long time. You've really been preparing for this. Gold stocks, anything else?
I like uranium stocks because it's become very hard to get permits and produce oil in the US. So hopefully the world is going to go back to nuclear power, and uranium right now is quite cheap, way below its previous highs. And I think that uranium is the safest, cheapest, and cleanest form of mass power generation. I'm a big bull on uranium. Relative to gold, silver is very reasonably priced at this point. It's kind of the poor man's gold. Mm-hmm. So owning silver is a smart thing to do too. I wouldn't touch a bond right now. Mm-hmm. I mean, interest rates are eventually going to head up to the levels of inflation and beyond. They have to, otherwise there won't be any capital formation. People won't say.
That's interesting. You say that. Sorry to interrupt, Doug, but I'm kind of surprised to hear you say that. I would think that given the context, the Fed would now use this as an excuse that they can't hike.
Well, they're actually caught between a rock and a hard place. On the one hand, if they don't keep printing money, which they do by buying the federal government's bonds and crediting their accounts at commercial banks, if they don't do that, we could have a 1929 style credit collapse. But if they do that, we're going to have much, much higher levels of inflation, which in an advanced industrial society is just devastating. So they are finally caught between a rock and a hard place.
Would the higher interest rate environment not be bearish then for gold?
Well, a higher interest rate environment, when interest rates in places like Zimbabwe went to 50% and 100% and 200%, was that bearish for gold? For the residents of Zimbabwe? No, not really. I don't think interest rates right now are not keeping up with inflation. Inflation is 15% or more. Interest rates in safe, secure forms are 1% to 2%. So right now you're losing something like 12, 15% per year. So interest rates are going to have to go a lot higher before they start hurting gold, is the answer to the question. They're going higher, but they're going to have to go a lot higher before they start hurting gold. We're going to need real interest rates of 5 or 6 or 10% before gold starts getting hurt. And that's in the future, quite a bit in the future.
Doug Casey, as always, thank you so much for joining us today from a much happier place, I think. I hear the birds chirping. Thank you so much always for your insights, your wisdom, and your time.
Thanks, Daniela. Appreciate it.
And thank you all for watching. We'll have much more for you coming your way, so be sure to stay tuned to Stansberry Research. And don't forget, premier content you can't get anywhere else. You got to sign up at danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.